Hello everyone, this is Matsipe Molefi, the founder of MOSOTHOFXTRADER. MOSOTHOFXTRADER is a registered company that helps people and teaches them to trade Forex better. We supply strategies, especially technical strategies, and we also teach people how to trade both technical and fundamental trading. In this video, I am going to teach you the simplest way to understand the Forex chart using candlesticks. Before we start, we have to look at our content. Our content contains a few little how are we going? Okay, let me just play. Okay, few little written chapters there. We have 3 chapters. The first chapter explains what is a candlestick chart, and the second chapter explains the candle anatomy, and the third chapter explains the candlestick pattern. But the most important thing is that once you understand how and what is a candlestick, you can be able to apply this knowledge on your Forex chart or your Forex platform. Okay, now this is what we call a candlestick chart. A candlestick chart which contains the buying movement and the selling movement. In Forex language, we call this the bullish movement because it's an upward movement, and we call this a bearish movement, which is a selling movement. But also we have another kind of movement in Forex where we see the candles not going up or down but moving sideways. We call that movement a consolidation movement. So before we even go any further, we are on chapter 2 already. Chapter 2 explains a candlestick anatomy, meaning the anatomy, the body, the highest price, the opening, the closing price, the lowest price, and the opening price. As you can see, this sorry about that. Alright, so this is the body. This is the body of a candlestick. This is the body, and and then this is your opening price, and this was like the highest price, and then it went down, and then this was the lowest price, and then it closed here. The same here, this was your opening price, and then it went to the lowest price, and then it went up, and this was the highest price, and then it closed here. So now we have the doji. We have the dojis. We have types of dojis. You can see we have the other that is called only a doji, and then we have other 3 types of dojis. The other doji that we see here is a long-legged doji and a dragonfly doji, gravestone doji. So what is the purpose of a doji? The purpose of a doji inside the Forex market, let's say the market is a bearish movement like this one that we are seeing, our bearish trend. You have missed to place a trade here or either here, but a doji happens here. A doji gives you an opportunity to place another sell trade, because as you can see, once it happens that the market is selling, you can see that the doji that is going down, the doji that caused the movement that is going down, the market changed a little bit, or we can say it breathed from here to there, and then it didn't pass this position, and then it continued with a selling movement. But you cannot sell here. You rather sell here, not here. It's not wise to sell. You sell here, and then you put your stop loss up there, or you can put it higher here. So on the next class, I'll be making a video where I'll be explaining what is a stop loss and what is a take profit, and why is it important for you to use those the stop loss and take profit. and the other class I'll be actually showing you how to apply your technical analysis strategy. So we have another doji here. So this doji that you see is just a doji. It's not like this one. This one is a long-legged doji, and then this one is just a doji. And then if you missed an opportunity here, you can wait for another opportunity. This is another opportunity, then you sell, you continue, because the overall trend is a sell. So when the market is selling, most of the time what you should be looking for, or at times some people can risk buying here, but those are the bigger traders that got no fear, traders that have been in this game for a very long time. Like, let's see, Ralph Wayne, Jason Noah, FX Codes, and others. Now we have the Marubozu candle. This candle is a shaped candle. It doesn't have a closing price, or it's just a candle with no shadow, no tips, no nothing. If you're sitting on your platform and then you see this candlestick moving from the lowest position where the market changes, where there's a support for buy, or where the market actually tend to buy most of the time, you buy here, because it's another strong indication that the market is about to change. Then you buy here. But if it happens at the high, you sell. So the beauty of it is like that. And then you have the harami, the bullish and bearish. The harami, if it's a bullish movement, it happens at the low of the market, meaning at the lowest trend corresponding to other lows of the previous trends. So that if it happens at the low and it becomes bullish, you buy at that low position. And then if it happens at the highest position, or at the peak of the market, where the market is more likely to turn, most of the time you see it turning and then you experience the harami, you sell, you put your sell, and then you continue to take profit. As you can see, this is an example. Here is a bullish harami. If you have it here, then you buy, you continue with your buy. But if you have it up there, then you sell. Now we have the hammers. The hammer, we have the bullish and the bearish. So here we have the hanging man. The hanging man is mostly likely to happen, or it happened mostly likely at the lowest position in the market. It happens a lot at the low position in the market. If you have a hammer at the low position, you sell it. You buy at the lowest position, you buy. It's a strong indication of a buying movement. And then if you have it at it's not most likely to happen at the peak of the market, but if it happens at the peak of the market, you sell. So it's a strong indication of a sell when it happens at a high or at a peak of the market, and then it's a strong buying movement, signal, or a strong candle that shows you should buy if it happens at the lowest point where the market turns. So you can see here we have it at the high, and then once you have it at the hanging man hammer, then you see the market is selling, right? This is exactly what I was saying. If it happens at a high or at the peak of the market, you sell. But if it happens at the low or at the bottom, at the bottom, sorry about that. It happens here at the high. Why is it okay? Here at the low, you buy. So once you miss this opportunity, it can happen again here, you still buy. So it's actually one of the most strong signals you can use. Then we have another inverted hammer. Inverted hammer can happen either up or low on your trend, but if it happens on the peak, at the peak of the market, then you sell. Once it happens at a low on the market, you buy. So you can use candles to actually sell or buy in the market. Then we have a bearish engulfing or any sidebar. if you have this kind of a candle at the low of the market, you buy. Where you see this, and then meaning the buyers are strong than the sellers. That's why they say it engulfs the bearish movement, it engulfs the bullish movement. So remember, the movement, when we say a bullish movement, we are talking about the movement that is going up in the market. When you talk about the bearish movement, we are talking about the movement that goes down. But once we say consolidation movement, you actually know that we are talking about the movement that is moving sideways, meaning there's no up, there's no down. In that way, some people, they create a channel where I'll be showing you how to trade a consolidation movement. So now we have the morning star or the evening star. Once it happens at the low, at the morning star, it happens at the low of the trend. It actually says to you the market is changing that direction, buy harder. But if you have an evening star that happens at the peak of the trend, you sell. You can see this was an evening star, then you sell. And then there was, then here is the other one, the three white soldiers. The three white soldiers, there are strong candles, three strong candles that follow each other, but most of the time you can see my brother here used his trend line, and then it broke the trend line of the writer here. Once it breaks the trend line, you know you can sell. Like what you can, I will teach you, or I'll show you what happened on gold this week. So now you sell harder, and then you smile. So yeah, I think that was enough for today about the candles. Once you know, you should know your candles. Once you know your candles, market becomes easier. So on the next class, I'll be teaching you how to apply these candlesticks using technical analysis to support or to make your strategy much stronger, and be able to trust your strategy, and also prepare your psychological, and to put your mind at ease while you place the trade, because you know your strategy was right, your candle strategy was also right. Therefore you cannot panic in the market. You can just wait for the time where you take your hit, your take profit, because as a trader you have certain targets, then you can trade according to the right way to reach your target. Thank you.